Join us now to discuss Lowe's. But if you see me doing stuff like that, I'm not like seeing things. Brian Nagel, senior analyst covering consumer growth and e-commerce sectors at Oppenheimer. What was your estimate for same-store sales this period? How's 5.1 compared to it, Brian?
Well, good morning, Joe. So we were estimating a range of down 4 to 6. So this down 5.1, while weak, in my mind, is very much in line with expectations. I think the real key here is that Home Depot, when they reported a week ago, basically teed this up. Because as I'm looking through this Lowe's report this morning, it's very, very similar to what Home Depot said last week, and that is results are weak, arguably weaker than we expected them to be maybe a couple months ago, but reflective of a difficult environment. But like Home Depot, Lowe's is also saying that they are managing very well a difficult backdrop. So it's weak, but as expected.
Is it weaker than you expected it to be before you heard from Home Depot?
Yeah, that's a good question, Becky. So, what I think we learned, probably one of my biggest takeaways from the Home Depot report last week is that the business slowed rather significantly in the month of July. Okay, so these guys report on a July quarter. So that's what Home Depot said. It was July. We're basically hearing that across retail. There was something happen in July. There was unfavorable weather, other unfavorable consumer dynamics, which basically took consumer spending from an already soft spot to a softer spot. So that was the surprise, so to say. That was the new information in Home Depot. And I think Lowe's today with these results, again, while they're not commenting in the press release, I'm sure they'll talk about this on their conference call here in a few hours. But I assume they're basically seeing the same thing, that this weaker trend in July.
A pressured macro environment. That's weird because macroeconomic environment, because GDP seems pretty good. Everything seems sort of okay. I like this. So that weaker than expected do-it-yourself sales. If they depended on me or Andrew or something for those sales, but for do-it-yourself, it would be zero. It would, unless it was light bulbs. But so these are big ticket items, supposedly. People aren't, or at least it was below what people thought. Also, you mentioned it says unfavorable weather. I think that they have like a master earnings release ready to go every quarter, and I think that's always there. I think that I think they just leave that there. Is it ever favorable? I mean, isn't it always kind of, they can always, somewhere in some region, there's going to be something where they can say this is not our fault, it's unfavorable weather?
Well, it's an interesting, quite funny point you're bringing up, Joe. I mean, look, weather has been erratic. Weather over the last 3 years now has been more erratic than it had been previously. So,
well, that should be good for home improvement. That should be good for fixing windows and doing everything. I don't understand why that.
Bad for planting. Yeah,
but it should be good for having to fix things that get hurt in the unfavorable weather.
Over time. So what happened here, and I mean, I hear you completely on, that this has become the, kind of the easy excuse for a lot of retailers. But, well, look, we had these abnormally hot temperatures. So what happens in that dynamic is people just aren't outside as much. It's just too hot. They're not, like, I think Becky just mentioned this, they're not planting. There's no use planting plants that's going to die. So in this case, the hot temperatures, while there may have been some incremental demand that came as a result of that, on balance, it's probably a negative.
Look, it's also, though, what we were talking about just as we were leading into this, that so many people fixed up their homes during the pandemic when they were there. They've shifted the spending away. We're still dealing with that. And then I wonder if you really saw weakness in July, if that fits into that new Fed survey that showed the highest level they've seen since 2014 when they started keeping records of this. The highest number of people think that they're going to be unemployed in the next 4 months. That's pretty indicative of consumer spending and consumer confidence.
Absolutely. So I agree with both those points. And I talk about this a lot, and I know it sounds like we're talking about old news now about the pandemic, but I still very much believe that the pull forward in demand that happened during the pandemic is still having effects on demand in home improvement now. And then the second point, Beck, I think it's a great one. Look, I mean, we talk about, from us as economists and analysts, we're saying, look, this is still a historically strong employment environment, which it is. But unemployment today is higher than it was 6-9 months ago. And from a consumer's perspective, that does have some negative implications.
Yeah, that's what's weird. It's, in fact, higher enough to, in the past, have been enough to forecast a recession when it rises. But it's weird because it doesn't take in the absolute value of where you're starting, for the absolute number of where unemployment was. If it goes up I don't know, somewhere between 0.5% and 1% of added unemployment in the past, or some rule, I forget, SAM or some rule that indicates you could have 2 quarters of negative growth. But it's weird if you start from 5 and go up to 5.5 or 6. That seems different than going up from 3 to 3.5, whatever we did, 3.5 to 4.2, or wherever we are. But that could be, the canary in the coal mine, Brian.
Well, look, and I totally agree with you, Joe. I mean, it's all, we have to keep in mind, we're looking at these Lowe's results today. We're looking at any retailer. There's very much an emotional component behind consumer spending. So I guess maybe one way to think about it, and it's not the most scientific, but you're taking that Lowe's consumer today versus that Lowe's consumer last year. And just on that very simple basis, that Lowe's consumer feels less confident about their own personal financial situation today than they did 1 year ago. And that's the comp store sales year on year down 5.1%. I think that's a big component of this. And it just, there's very much an emotional component to spending, particularly on discretionary items and bigger ticket discretionary items.